Let's start with the crude prices first, which are hovering around $108 a barrel on expectations that the US Fed would scale back its massive economic stimulus. And the world powers also would strike a preliminary deal with Iran over nuclear program. So that's the kind of reaction you have on prices. 0.1% on higher side, 108 is holding for Brent. The gold in the meanwhile is trading near 4-month lows after its biggest drop in 7 weeks in the previous session, hurt by fears that the US Fed could start trimming its commodity-friendly monetary stimulus in the next few months. Minutes of the Fed October policy meeting released on Wednesday show that officials feel that they could start scaling back the US central bank's $85 billion in monthly asset purchases on one of the next few meetings, depending, of course, on the economic growth. Let's get in then. Jim Sinclair, he's commentator, precious metals, and he joins us on the show. Jim, hi, welcome. In one of your previous reports, you gave a call of $50,000 an ounce as a price for gold. What's the rationale behind that call, considering that we are looking at lows in precious metals this year?
Price setting mechanism for gold will be emancipated from paper to the physical, and the physical market will seek a true level on supply and demand.
Jim, what's your year-end view on the gold prices, where it could be headed, and where do you see the prices in the next year as well?
I believe at the year-end we'll be having a recovery from around the 1100 area towards 1500, let's call it 1425.
Jim, with the US Fed minutes supporting tapering, do you see gold shaping up as a safe haven bet even more now?
If the only method by which taper can be accomplished would be a stronger, more significant, serious, long-term economic recovery. Should that occur, the velocity of money would expand and inflation would become a reality. The price of gold would rise.
Clearly a bullish voice coming in for the precious metal space there. Jim, thank you so much for joining us with your sense on where the precious metals could be headed this year and the next as well. Let's get on then. Vijay Bambani, who's author and CEO, BSPLindia.com. Also joining us is Chirag Kabani, who's technical analyst, AskChirag.com. Vijay, to you first, what's your sense now coming in for gold prices? Jim, for one, is clearly very bullish going forward on prices.
Manisha, as we kind of debase our fiat currencies, real assets, or hard assets as they are called, over a period of time are likely to gain. But the absolute near term is something I'm pretty much sure that prices of $1,600 and $1,800, etc., which are being bandied around in the markets, will be a slightly difficult task for the bulls to achieve. When I say over a period of time, I'm talking in multiples of 3 years for gold and probably 4.5-year cycles for silver. Because at this point in time, central banks world over are not only managing to stimulate the markets with easy money, but they are also managing to curb core inflation. Now, one of the two things have to happen. Either the curbing of inflation has to fail, or core inflation has to rise at a clip which is unmanageable for central bankers to curb. So that itself will take a while, and therefore my view that although I'm bullish, I am seriously bullish on bullion, especially silver more so than gold. But my view would tend to be in multiples of 4.5 years on silver rather than play a quarter at a time.
Fair point. Chirag, what's your sense coming in for gold and silver prices? Because after the weak opening that we saw in Asia, we have seen a considerable turnaround coming in after European markets opened.
Oh yes, in the domestic market, the weaker currency is supporting the prices. Till the time the US yen is weak, I'm expecting gold to trade in a range of 29,700 on the downside and resistance on the upside at 30,400. In the international market, gold breached an important low of $1,250 yesterday. Now it is important to see if a weekly close it manages to give about $1,250. If it able to do that, then a short-term bottom could be in place for gold prices again, and prices might give a corrective bounce back till the level of $1,280 to $1,294. Till the time prices are trading above $1,300, the larger range would be $1,220 on the downside and $1,300 on the upside. In the silver prices have been correcting sharply in the COMEX market from the levels of $25 to now sub below $20. It is quite oversold in the short term. Any pullback coming to the levels of $19.60 to 19.31 can look to go long with a stop loss below $19. Immediate upside target will be till again $22. In the domestic market, one can look to go long around at 44,800 levels. Stop loss would be below 44,300. Immediate upside target could be till 47,200 levels.
In the meanwhile, there has been a turnaround in the energy space. While the US weekly inventory data has been yet again bearish for the prices, we just seem to be holding on the higher side, and that's because of markets awaiting on what could be happening in Libya, Syria, and of course the talks on nuclear powers on Iran. Vijay, how are you looking at the crude prices now at these current levels?
Manisha, since we've not overcome even one previous swing high, I think this would count as a technical pullback rather than a trend reversal. Although technical pullbacks can be fairly strong, fairly vicious, and can surprise the bears fairly strongly, I think what needs to be noted is their sudden faltering and petering out. So at this point in time, I'm not really comfortable buying crude or natural gas, because upsides, if any, can possibly run out of steam and surprise you on the downside. For example, natural gas at 234, 235 will get into a zone where the bulls will start to unwind their long positions and the bears might want to short. Ditto with crude oil prices. I think another percent and a half, and it'll start running into rough weather. So buying at this point in time seems to be very fraught with risk.
What's your sense, Chirag, on natural gas prices? With 2% on the higher side, how would you want to trade the intraday?
Yes, as Vijay sir said, 234 to 235 is a strong resistance. Largely, prices have been trading in a long range of 215 on the downside and 235 to 236 on the upside. If after today's inventory data, if prices are sustaining below the level of 231, one can look to take fresh shots with a stop loss about 234. Immediate downside target will be till 224. If 224 is broken, again retest of 216 cannot be ruled out.
And it's the base metal sector which has been choppy as well. While we did see some opportunity buying coming into the markets today, the copper prices are off their 4-month lows, but still trading below that $7,000 per ton mark. In the Indian markets, in the meanwhile, it partly is because of the rupee as well that you have seen nearly 1% of gains coming in. Vijay, how would you look at something like a nickel or an aluminum, where we have seen choppy moves coming in, but more declines than gains in this month?
Absolutely right, Manisha. What I'm seeing on the screen is an average ballpark rally of 50 to maybe 75 basis points on across the industrial metals complex. But unfortunately, the screen reading which I've been talking about over the last one fortnight is not imbibing any confidence. Talk about the price, volume and open interest correlation. It's not really talking about traders being in a hurry to buy or exhibiting any kind of recklessness on the buy side. The ticket size per trade is pretty poor. The correlation between the average and the last traded price remains compressed. So my guess is this is a technical rebound caused by the bears who are sitting on money, who are squaring up their short positions and taking some profits home. It's too early, too premature to call it a trend reversal, and I think at higher levels that a higher probability is that it'll run into selling pressure.
What's your sense, Chirag? How would you want to trade this space, especially from those reforms coming in from China? Do you think it still is an impetus to buy?
One has to clearly wait for some time before a clear base is formed in most of the base metals. If we look at the copper charts, copper had an important support at the levels of 442, which it broke this week. Again, this pullback is trying to retest that level. So unless and until the prices are not able to stick its neck above this level, I wouldn't go out and buy. Once it is above this level of 442, it's a good buy again with a stop loss below 438. Immediate upside target will be 449. If someone wants to venture for longs, only the base metal which is looking good is nickel. It has good support at the levels of 845 to 846. So one can look to buy around at this levels with a stop loss below 842. Immediate upside target would be 874.
And it has been a disappointing day of trade for most of those agro commodities. You have seen decline coming in, especially for the spices space, where turmeric futures have declined nearly 3% in trade, and you also have seen jeera prices declining in the intraday market. The guar seed and the guar gum prices also saw a decline of nearly 2%. Pulses like chana also are trading down by a percentage point. The edible oil space in the meanwhile is trading slightly on the higher side. Vijay, what's your sense coming in for soybean soy oil prices now, because it's nearly 1 to 2% of a gain today?
Manisha, the movement that you're seeing is in almost in lockstep with the Indian unit. As and when the rupee weakens against the dollar, the landed price of crude palm oil and other edible oils tend to get more dearer, and the financial futures market tend to basically discount that happening. My guess is as and when the rupee depreciates further, the possibility of crude palm oil appreciating should not be ruled out. But fundamentally speaking, the scope for appreciation is likely to be fairly calibrated, because Indonesia and Malaysia both are fairly well supplied, and under 2–2.5% on the upside, and I think you should start seeking short selling opportunities on CPO.
Chirag, what's your sense coming in for spices now, because that is one area that has been choppy but has seen a lot of profit taking in the recent few sessions?
Oh yes, one can go and venture out and look to go long on jeera at this point of time. It is trading around 12,700 levels. Any dip coming to 12,680, 650, one can look to go long with a stop loss